I want to cover Hong Kong because you're calling it one of the best markets this year. Quite interesting because, of course, it's really the support coming from China. Why do you think, though, that A shares have outperformed so far? A shares, excuse me.
Yeah, well, I think we're in a situation where, Hong Kong acts almost like a warrant on China. If China does better, Hong Kong does much better. China, I think, is on the road to recovery after the long slowdown during COVID, and I think that's positive. It's being slow. The authorities are not trying to overcook things because they've done that in the past and there have been problems. And I think Hong Kong is doing quite well there. We've also got the technical factors with the peg in terms of the fact that slightly weaker US dollar has meant that a number of other countries have decided, for instance, Taiwan, I think a lot of the insurance companies repatriating assets back into Taiwan dollars, so the Taiwan dollar goes up. That then has a knock-on effect to Hong Kong too, because people are now starting to look at the Hong Kong dollar. There's quite a lot of liquidity in Hong Kong. Overnight rates have collapsed. So I think there are quite a few positives there in terms of Hong Kong, in terms of the fact that it does look as if it's in a fairly bright area at the moment.
So it's really the diversification story that we started seeing right around the Rose Garden tariff announcement. So Hang Seng Index up at 21%. How much further do you see much of an upside here? And do you think we're just getting started with the diversification, or have we made some meaningful progress? Not just Hong Kong, but the overall money moving at the moment.
I think markets don't go up in a straight line. So I think Hong Kong's done quite well recently. We've had a sluggish period. We do seem to be in a fairly sluggish period in the markets, but I think we have to remember that it underperformed for a very long time. Valuations are quite low. Some of the key stocks in Hong Kong are on tremendous yields. And it looks now that probably those yields aren't going to be cut. So that's another inclination that people look at. In addition to that, it's kind of a US dollar base as well. So foreign investors like that too. So I think there are a whole bunch of reasons why it looks positive there. In terms of diversification, I think we're not really... what's likely to happen is we are likely to see more companies moving out of China, as we've seen Apple moving into India. But China is such a huge component of manufacturing around the world. It's going to be very difficult for that to make much of a dent. Okay, there may be some political issues about that, but it's unlikely to make much of a dent. And it looks as if it's going to be very difficult for the US to develop its manufacturing strategy in the way that President Trump wants. So I think we're likely to see small movements, gentle movements. Yes, people are going to try and reduce their exposure to particularly critical areas, but I think it'll still be relatively muted.